Hey everyone, welcome back to Corporate Decoder, the place where we unpack the money secrets of publicly traded companies. And get ready, because Scilex Holding Company is making some seriously interesting moves that are going to affect their future. Before we dive in, if you like getting straight talk about company finances and what it all means for investors, make sure you hit that subscribe button. We also have a fantastic community over on Discord that you should definitely join us, link right down below. This company, Scilex, is telling us about some really important agreements they've made, and it all happened on July 22nd, 2025. We're talking about big deals that could change how they raise money and manage their existing debts. So first up, Scilex has inked a deal called a common stock purchase agreement with a company called Tombstone Capital. Think of this as a flexible way for Scilex to get cash by selling its own stock. They can sell up to $100 million worth of new stock to this investor, but only when they choose to do so. This gives Scilex a lot of control over when and how much money they bring in. The way this works is pretty neat. Scilex can decide to sell shares, and they'll do it at a price based on what the stock has been doing in the market. For example, they can sell at 96% of the average price over a really short period. This means they're not necessarily selling at a discount, but it's tied to the market's own valuation of their stock. Now there are limits. This investor, Tombstone Capital, can't end up owning more than 4.99% or even 9.9% if they choose of Scilex's total stock. This is a common way to prevent any single investor from gaining too much control right away. As a thank you for agreeing to this deal, Scilex is giving Tombstone Capital 50,000 shares of their stock even before any money changes hands. This shows the investor is serious and committed to the agreement. And to make sure all these stock sales are above board, Scilex is also entering into a registration rights agreement. This means Scilex will file paperwork with the government to officially register these shares so that the investor can easily sell them later if they want to. It's all about transparency and making sure everything is legally sound. Next, Scilex is doing some tidying up with its older warrants. They're making deals called warrant exchange agreements with holders of their Tranche B warrants. Basically, Scilex is letting people swap their old warrants for new ones, essentially changing the terms of how many shares they can buy and at what price. So they had these older warrants that allowed people to buy about 107,000 shares at $36.40 other. Now they're exchanging those for warrants that let people buy a lot more shares, 500,000 in fact, but at a slightly higher price of $40. This is a way for Scilex to manage their outstanding warrants, potentially reducing the number of shares that could be issued from old agreements and setting new terms. The new warrants have an exercise price floor, meaning they won't go below a certain price like $36.40 even if the stock drops significantly unless shareholders agree to it. They also have this interesting feature where the exercise price can be adjusted downwards if Scilex does a future stock offering at a lower price. This is called a full ratchet adjustment, and it protects the new warrant holders from significant dilution if the company raises money at a much lower valuation later on. Just like with the stock purchase agreement, there's a cap on how many shares one person can get when exercising these new warrants. It's set at 4.99% of outstanding shares, limiting any one holder's stake. Then we have a really big deal with Oramed Pharmaceuticals. Scilex had previously issued what they call penny warrants to Oramed, giving Oramed the right to buy a lot of Scilex shares at a very low price, just 1 cent per share. Now Scilex has an option to buy back these penny warrants from Oramed. This is a way to get rid of a potentially huge number of shares that could be issued in the future. The total buyback price is a significant $27 million. To even get this option, Scilex has to pay Oramed $1.5 million in 2 installments. This is essentially a fee to hold their right to buy back those warrants. If Scilex pays this fee, they can then choose to buy back the warrants in 2 stages by the end of September and end of December of 2025. And here's a nice bonus: if Scilex goes through buying back these warrants and pays everything off their existing debt agreement with Oramed due in September, would have its maturity date pushed back to March 2026, and they won't have to pay any extra fees for paying off that debt early. This shows how interconnected these different financial moves can be. Oramed does have the right to end this whole option agreement if Scilex misses payments or doesn't exercise the option by the set dates, which means Scilex has to be very disciplined with their payments and decisions. So all these deals involving selling new stock or exchanging warrants are happening without being publicly registered right away. They're relying on exemptions like Rule 506BE and Section 410(2) of the Securities Act and Section 3 died. 9 for the warrant exchange. This usually means they're selling to sophisticated investors who are expected to understand the risks, and they're generally exempt from the full registration process, which saves time and money. This filing shows Scilex is building a set of financial tools. They have this line of credit from Tombstone Capital, which is like a safety net for raising funds when needed. They are also restructuring their existing warrants to potentially simplify their capital structure and reduce future dilution. The deal with Oramed is a big one. Buying back those penny warrants for $27 million is a significant step to prevent a massive influx of shares into the market. If they execute this well, it can be very positive for existing shareholders by reducing dilution. The fact that they're paying an upfront fee for the option and have strict deadlines shows the urgency and importance of this decision for Scilex. Now let's talk about what this all means. Scilex is positioning itself for flexibility and control over its financials. The stock purchase agreement gives them the firepower to raise capital if opportunities arise or if they need it to fund operations. The warrant exchanges are about simplifying their cap table and managing future dilution, which is always a big concern for investors. And the Oramed deal is a direct move to cut down on potential share flooding, which is a smart strategic play. One risk to watch is the pricing of these deals. If Scilex has to sell a lot of stock at a discount to the market price, it could signal that the market isn't valuing them as highly as they'd like. Also, managing these multiple agreements and making payments on time requires strong financial discipline. Overall, Scilex appears to be actively managing its financial health and future potential. They are not sitting back, they are making bold moves to secure funding, better manage their existing obligations, and potentially prevent future dilution. It shows a proactive management team. This could be a sign of confidence about their future prospects. Keep an eye on how they execute these plans. Alright, that's our breakdown of Scialex's latest filing. What's your take on these financial maneuvers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.